All right, we're back once again. So updated open interest just hit about an hour ago. I just woke up. And we're gonna look at this picture. Same setup here. We're gonna look at the if there was any change here. Basically, what I'm noticing is that all the gamma exposure sitting here, basically in between this volatility trigger and the delta curves. You can see kind of how it just kind of follows that delta curve all the way up. Same thing here. There's quite a bit above here, but those are going to be for different expiries. So at least for tomorrow, or at least for today and the rest of the week, the delta curve is down here pretty close to zero. So unless they're able to gamma squeeze it to 3,900 on some catalyst, I don't see that ever happening. So we're going to start with just kind of eliminating what's not going to happen. That's not going to happen. 3,950, not looking too good if you're a bear. And then the taper, sort of, if you look at this like a volume profile, the taper here comes right at where all that delta is basically as close to zero as you could possibly be. So this is likely to all expire, not needing to be hedged, essentially. There's no reason for price to come down here as the market makers deltas basically aren't at risk. They're not at risk of anything. Maybe, as far as being delta neutral, they don't need to come down here and short anything. Same thing here at 4,000. This is an interesting level. I definitely am interested in watching this positive gamma here, but this is going out into September and then the 4,000 into the end of the week. But a lot of this down here is just looking to me like that's all going to expire, as well as this here too. So these edges here likely to expire and not need to be touched today, essentially. So I could see 40.90 possibly, as we're opening here at 40.60. So a lot of this is just going to be, just dead. It's dead open interest. It's dead gamma, not necessary to go down. And then 40.90 kind of acting like a cap. 41.15, that's going to be for Friday. That did not change, but there was a little bit of gamma exposure built up here on 41.25. 4,000 still sitting there as sort of a magnet into Friday. I'm not sure that's going to be anything that's going to be of concern yet, just because they're starting to build up gamma into the upper levels above these volatility triggers. Now this vol trigger here for today was shifted down, so that means a lot of the puts that were open for today, they were closed yesterday. So that's why that volatility triggers opposite happens when people close all their calls. That vol trigger will shift higher. If it's below price, it'll shift up. So this shifted down. So again, the delta curve here showing that high possibility of 4,100. In fact, given that gamma right there and the delta curve. And you can see here a lot of this stuff is sort of near the low probability areas. So my methods, essentially, my theories anyways, have been sort of eliminate where it's not going to go first. So it's likely not going here, and it's likely not going to like 4130. But there is a higher probability of it going to 4100 at this point, especially where it's opening. And there's a high chance that it just sits there at 4060. I don't see that. I could see some chop here. So the pricing kind of coming in between this 4100 to 4065 area. I could see price kind of chopping around in there. So there might be some good opportunities as far as waiting for the rip, selling it, and then it'll allow you to kind of catch the drip, on back to the 4060. There could be a case made for that, but you're going to be above this volatility trigger, so that volatility is going to start being suppressed. So watch for the VIX today. If the VIX is starting to drip and get sold off, then you know that 4,100 could likely be a pin or somewhere around there. So I would be looking for a pin today. If the VIX starts to die, 4,100 into tomorrow as well. So that was already on there. This is kind of old, but again, it was sitting there sort of sneaky like, and I said it in the video. This is setting up a possibility for a squeeze, just because of they've got this sitting here and it's not moving, it's not shrinking. Market makers, maybe going to have to get there and hedge that out. But again, you got the 4090 cap, so keeping that in mind, that we got the 4090 vol trigger sitting here. Going into Thursday, still a ton of negative gamma into Thursday. So market maker doesn't necessarily need to hedge all of this yet, not until we get, maybe till tomorrow. But what this is sort of setting up for me, if I was just going to be guessing, is take it to 4100 as a market, maybe tag it, close below 4090, and then we sell off, and we sell back off to maybe 4000. This would be, my bear case, and what would hurt the most market participants, because if you sort of start with the assumption that the market's going to do what destroys the most people, this is sort of what would happen, right? You take it all the way to 4100, everybody's bearish, and then sell it back off in some kind of bull trap. But we do see 4150 into next Tuesday, but there's not a lot of gamma here, so it's only 4110 and 4150, so there's going to be sort of a battle in between there. So 4090, 4095, I sort of mark these out here, this level here, and into 4115, likely to be, where you would see longer term sellers come in. This is a virgin point of control sitting here at 4107. I would not be surprised to see the market try to take it there. Kind of clear that out, kind of test that, and then sell off, sort of like what SPY did yesterday. SPY took it to 40.0560, cleared that VPOC out, and then sold off. And here we are, we're back up again. Probably going to go test that 403 VPOC, and then back up again. So you can kind of see, the market moves sort of visualized using the point of control and using the volatility triggers and the big gamma levels. You can see what the possibilities are here. So right here, we're seeing that this is the weekly close. This is sort of like the weekly gap that occurred. So we're kind of trading in and around that. I don't really see this being breached, but again, you probably still have to come down here and test this point of control here from yesterday, which is down here at 40.26. I don't see that happening, but because that would be extremely interesting and bearish. But still, you're underneath this 40.65. Then you're still pretty much under all the volatility triggers for the most part. So as long as we stay under there, I guess we could continue to push down and maybe squeeze out that positive gamma from above. So very kind of tricky to read this. I think folks are also sending some mixed signals. I saw some mixed signals with chips yesterday, so I'm not sure how those played out, but let's see here. Yeah, nice little gap up here. There's a ton of flow on the triple bull semiconductors. Didn't really see any movement here, and then we got the Bed Bath & Beyond squeeze happening again, which we saw in the Discord. And so if you like this, make sure to hit a like button and hit a subscribe button and leave a comment. Peace.